everyone. Today we know that many people, many youngsters, they prefer to invest the money in equity markets and they prefer to invest the money through IPOs. Now, when it comes to IPOs, different newspapers they publish advertisements related to IPOs on the front page. But the problem is people are not able to understand the advertisements or they don't know which aspects, which components of the advertisements of IPOs should be considered, should be given importance. That is the reason why I have prepared this video. So let's start. This video will give an idea about what you must check while reading the advertisement of an IPO. The very first thing that you guys need to go through is the basic information about the IPO. Now, when I say the basic information about the IPO, you need to focus on the name of the company. The moment you read the name of the company, it will help you to identify which company is offering the shares to the public or to the people. Then you need to focus on the important dates of the IPO. These dates will give an idea about when the IPO is going to start and when it's going to end. It means it will give an idea about the window which is available for you to invest the money in that IPO. The third thing that you need to focus on is the price band of the IPO. Now, when I use the term price band, it's nothing but it's the range of price at which you can get the shares. Suppose if I say that the price range is 100 to 150 rupees, so you can get the shares between 100 and 150 rupees. Generally, it is observed that if the demand for the shares, if the demand for the IPO is low, people will get the shares at 100 rupees. If the demand for the IPO is high, people will get the shares at 150 rupees. And then you need to focus on the lot size because lot size will help you to understand how many shares will you have to buy on a single lot. Now, when I say a single lot, it does not mean a single share. Lot is nothing but a group of shares. Suppose if I say that one lot is equal to 14 shares, it means if I am applying for the IPO, I need to apply in the multiples of 14. I can apply for 14 shares, I can apply for 28 shares, and so on. I cannot apply for 5 shares or 10 shares in that particular case. Then the next thing that you need to understand is the type of issue. The company is trying to raise the money from the people. Now, the company may issue the shares for the very first time, or it's possible that the promoters of the company may sell out the shares to the people. If the company is issuing the shares for the very first time, it's known as fresh issue. Here, when the shareholders purchase the shares, the money directly goes to the company. It is said that the company issues new shares and receives the money for expansion or debt repayment. Sometimes the promoters of the company can sell the shares to the people. That concept is known as offer for sale. So in this case, existing shareholders they sell their stake and the money goes to them and not to the company. Sometimes people they feel that OFS or in case of the issue related to OFS, the promoters are selling out the shares. So it's possible that some kind of negativity or negative impact may be observed in future. But that's not the case, guys. It's not. I cannot say that whenever the promoters they sell the shares, uh, it can result in some kind of negativity or negative impact in future. It again depends upon the promoters. If they feel that they have earned sufficient amount of profit, it's possible that they can sell out the shares. And then we even have the concept of mixed issue. Now, when I say mixed issue, it's combination of the fresh issue as well as OFS. Company may issue new shares in the market as well as at the same time, so promoters can sell out their shareholdings to the people. Then when you read an advertisement, the next thing that you need to focus on is the issue size. Size always plays an important role. Because when you look at the size, if I say that the size of the IPO is 10,000 crores or 5,000 crores or 20,000 crores or 27,000 crores, it gives me an idea about the amount of money that the company is planning to raise from the people. So you need to focus on the issue size. Now, when you focus on the issue size, you'll come to know the issue amount. The issue amount will give you give you an idea about the total value of the IPO. Along with the issue amount, you will even come to know whether it's an example of fresh issue or an example of offer for sale. Because if you come to know about this concept of issue versus offer for sale, it will actually help you to understand how much money benefits the company versus the promoters. Then the next thing that you need to focus on in the advertisement of IPO is the company overview. We have the concept of KYC, that is know your customer or know your client. But I feel that even investors should follow the KYC. Now, when I speak about KYC, it's not know your client. I feel that as an investor, it's important for us to follow the KYC, that is know your company. You should have an idea about the overview of the company. You should have an idea about the company in which you are investing the money. You should have an idea about the industry in which you are investing the money. You should have an idea about the sector in which you are investing the money. It can be say defense sector, it can be telecom sector, it can be steel industry, it can be say infrastructural sector. So when you are investing the money, the very first thing that you need to do is analyze the sector in which you're going to invest the money. Then the products or the services which are offered by the company in which you are going to invest the money. Because if I know the product or the service which the company is planning to sell in future, I can get an idea about the future of the company to some extent. I can predict the future of the company to some extent based on the products which are sold by the company. If the products, or if you feel that the products which are sold by the company uh, will be in high demand in future, definitely you can earn good rate of profit through that particular IPO. Then the market position of the company. In fact, I can say that today we don't have an exact example of monopoly as such. Of course, in case of share market, there are some companies which have monopoly in terms of the listed companies. But when you look at the overall market, rarely you can get an example of monopoly. So the assumption is there is competition in the market on a very large scale. So it's important for you to understand the market position of the company in which you are going to invest the money. It will help you to understand how strong the company is compared to the competitors. Now, market position can be even analyzed on the basis of the market share of the company related to the product which is sold in the market or the service which is sold in the market. And then you need to understand the strength of the company. It will actually help you to analyze, or it will highlight what makes the company better than others in its industry. It can be anything. It can be a particular technology. It can be even say a kind of say legal rights, IPR issue, IPR concepts, copyrights, patents. It can be anything. You need to understand the strength of the company in which you're going to invest the money. Now let's study about how to analyze financial performance of an organization. It's important for you to understand the financial performance of the organization on the basis of various fundamental aspects, on the basis of various ratios and the financial terms. You can analyze the financial performance of a company through its revenue, that is the money earned by the company, because that amount will actually cover the miscellaneous business needs. You can actually analyze the financial performance of the company with the help of PAT, that is profit after tax. Profit after tax means money which is left with the company after paying all the expenses. That amount can be utilized for the growth of the organization, for increasing the capacity of the organization. Then the next term that you can follow is say earning before interest, tax, depreciation and amortization. I can say that this amount is nothing but the amount with the company before making all the accounting adjustments, or before taking into consideration all the accounting adjustments. This gives us an idea about the overall business earned by the company, or the overall business achieved by the company. Then you can focus on earning per share. It's nothing but the return that you provide on an equity, on one particular share or one particular say, equity share. If this EPS goes up, it's an indication that the progress of the company is expected to rise in future. It actually helps the company stay competitive and innovative. And then you can focus on the net worth of the company, that is the amount of money left for the equity shareholders after paying all the liabilities. It represents the total equity strength of the organization. Again, if the net worth increases, definitely it's good for the investors. And then in an IPO, it's important for you to understand the promoter shareholding. Now, when I say promoter shareholding, it's nothing but control of the promoters on the company. Now, this is very, very important. If you have to analyze the promoter shareholding, you need to check the promoter shareholding before the IPO and after the IPO. In simple words, you'll get an idea about the control of the promoters on the company before the IPO and after the IPO. Generally, it is said that before IPO, promoters' ownership will be indicated before raising money, as well as after the IPO, you'll get an idea about how much stake promoters retain post issue. Many times, people they feel that if promoters are selling out the major part of their shareholding through, say, OFS, it's dangerous. As I told you guys, it depends upon the strategy, it depends upon the company, it depends upon the future aspects of the company. And then now let's understand the key risks associated with the business of the company in which you are planning to invest the money. Share market is a game of risk and return. Higher the risk, higher is the rate of return. There are some elements or risks associated even with the IPOs. When you're investing your money in an IPO, it's important for you to work on or to understand the industry risk associated with the company. There can be some external factors which can affect the profitability of the company. You need to work or you need to list out those external factors. Competition. You need to focus on the competition related to the sector in which the company is actually working. Because it is said that competition, it indicates or it increases pressure on the pricing and profitability of the organization. Then you need to focus on customer concentration. It gives us an idea about the dependency of the company on, say, limited customers. If I say that the top three customers of a company, say, handle, say, 70% of the orders, that is dangerous. Because top three customers of the company are actually getting or are giving 70% of the orders. So logically, even if one customer moves out, it can affect the business to a very large extent. And then you need to work on or you need to focus on the regulatory issues. You need to understand the rules and regulations of the government that can affect the entire working of the business. And the next part that you have to focus on in the advertisement is offer reservations. Now, it's an IPO, initial public offer. Reservations means stock or quota kept for certain individuals or entities. You need to focus on those numbers. Because whenever a company comes up with an IPO, it definitely comes up with reservations for different categories of investors. Companies, they have reservations for QIBs, that is qualified institutional buyers, such as different mutual funds and financial institutions. Companies even have quota for HNIs, that is high net worth investors, because they invest huge amount of money in the market in the companies, so definitely they get some preference. Then company even has some quota for retail investors. Now, if as an individual, when you're investing your money, definitely you guys will fall in this category of retail investors. So you need to understand the quota kept for retail investors because that will give an idea about the allotment which is possible in future. Generally, a small portion is reserved for the small investors and even employee quota. Because when the company comes up with an IPO in the market, it even tries to give some benefit to its employees. Some companies they do sell out the shares to the employees at discounted price. So you need to work on the quota for the employees because that will again give you a hint about the shares which you can get through the allotment process. The next part that we need to focus on is application and allotment process. Because when you apply for an IPO, it's important for you to give an approval to the UPI mandate that is raised by the UPI app that you're going to use to apply for that IPO. Then, in fact, you must follow the concept of ASBA, that is application supported blocked amount. If you are applying for an IPO of say 15,000 rupees, then in that case, you should have 15,000 rupees in your bank account. Of course, it will not be transferred to the company. It will be in a bank account, but you cannot use it till the IPO gets over and till the shares are allotted. And then it's important for you to know the registrar name, because registrar is the entity which will actually give you an idea about the process of allotment and the refunds. So if I had to summarize this entire thing, the advertisement of IPO, in fact, it is said that basic IPO information will help you to find out the answer for this question: is the IPO affordable for retail investors or not? The type of issue will give an idea about the real intention of the IPO. What is the intention? Whether the intention is related with growth or whether the intention is related with offloading of shares. Then the issue size will help you to find out the chances of allotment, the chances of liquidity. The company overview will give an idea about how the company will operate in future, whether the company has a kind of long-term prospect or not. And the object of the issue or objects of the issue will give an idea about how your funds will be utilized. Whether the funds will be utilized productively or not, you can get an idea through the objectives. And then when you speak about the concept of, say, financial performance, it will give an idea about how did the company perform in the past and whether the company or whether you can expect the company to perform in the same way in future or not. Promoter shareholding. Definitely we get an idea about the future prospects of the company. If the promoters they hold the major shares of the company, it means the company is going to perform well. The key risk will actually help you to identify the red flags, which are the risks associated with the business. And if you expect some kind of risk in the near future, it's better that you avoid that particular IPO. And offer reservations, whether you'll get an idea about the chances of allotment if you come to know the offer reservations. How many shares have been allotted for the QIBs, how many shares have been allotted for the employees. If you come to know about all those things, you'll get an idea about the chances of allotment. And the application and the allotment process. Now, if your application process is correct, it's possible that you may get the shares of that particular IPO. So this video gave an idea about how to read the advertisement related to an IPO. I'm going to come up with additional videos related to the different terms that are used in the advertisements. So till then, thank you.